The government has received a shot in the arm after the Moody's credit agency retained its sovereign debt rating at B1 just weeks after Fitch downgraded the country's rating. In an update to investors, Moody's said that the B1 status is a reflection of Kenya's strong growth potential, leadership role in the East African region and relatively deep capital market. The agency dubbed Kenya as Africa's startup nation thanks to the proliferation of high technology innovation. Moody's also lauded the government's decision to sign two simultaneous IMF standby agreements in February, saying it was proof of the country's commitment to structural reforms. The International Monetary Fund approved a standby arrangement and standby credit facility for a total of $688 million to support Kenya's ongoing macroeconomic and institutional reforms. The IMF package provides a policy anchor to strengthen the government's financial management capacity and to support debt sustainability. However, Moody's has raised alarm over the fiscal spillages, saying they could lead to an unsustainable debt path. The view comes just days after the Auditor General released a damning report saying government agencies cannot account for more than 67 billion shillings.
Is they'll ask for, which doesn't make sense in the end, but they'll ask that for a premium, in the sense that if you've been downgraded, it shows that there's an increased risk in the ability to pay on time or pay at all. And so one of the things that they'll do is the interest rates will arise. So the kind of interest rates we've been afforded before, by virtue of the fact that people have more confidence in our ability to pay, is going to rise. So a few percentage points, a few percentage points here and there. Now for the taxpayer, of course, that means that every additional shilling that we borrow is more expensive than the one that came before it. And so the pressure is, will the portfolio of debt, the growth rate of the debt, be as high as your overall GDP growth rates? Because if your economy is growing faster than your debt is growing, then it means you'll be able to pay anyway. If it is not, and that's what some of these signals suggest, that gap is closing very, very quickly, then what it means is over the future, we'll have to work much harder to pay the debt than what we've been doing before.